two books. One is You Are a Born Winner, and the second is Finance for Value Creation. And besides, I'm a cyclist, so I do cycling quite extensively. Recently, we went to Goa from Pune, cycling for 580 kilometers, and I'm also a marathoner. So, friends, this is all about me, and I just thought to share it with you as an additional input. Let's come back to our topic of today. And our topic for today is financial reporting under accounting standards. Now, what we intend to do in today's session, let's look at as to what are the topics which are part of this syllabus. So today we are going to cover number one, basics of fair value, as to what is fair value in the first place. Then we look at fair value techniques. After that, fair value adjustment. So whenever you do fair value computation, many times you are required to make certain adjustments. What those adjustments are, that is what we will understand. Number four, we will look at as disclosure in financial statements. So first of all, we need to understand as to why do we need to make the disclosures in the financial statements. And I can tell you right at this moment, remember, the financial statements which are prepared by any corporate anywhere in the world, one major objective of these financial statements is the user of these financial statements with the information given in these financial statements should be able to take a well-informed economic decision. That is the prime objective of all the financial statements which are prepared by the corporates, not only in India but all over the world. So what is the objective? The objective is that these financial statements should give all the disclosures, and therefore, friends, all of you as young and budding registered valuers can look at it this way. What do we need to disclose in the financial statements? Please make note of the underlying guideline. The guideline is any information that will help a user of the financial statements in arriving at a well-informed economic decision. Every such information needs to be disclosed in the financial statements. So if you and I follow this fundamental principle of disclosure, I can tell you, even without going through all those 39 accounting standards, Indian accounting standards, you and I will never make a mistake in not disclosing what is required to be disclosed. So we would talk about as to what are the accounting standards in all, and which are the ones that pertain to valuation, and out of those which pertain to valuations, which are the ones which are part of your course curriculum for this exam of registered valuation. Then we would look at HABU, highest and best use. So we understand as to what is HABU, and I can tell you, friends, invariably in your exam you will have one question asking as to what is HABU, and they will only ask you what is full form of HABU, HABU, highest and best use. That is the only thing that you need to remember. And if you understand the concept, I am sure you do not have to even remember it also, because automatically it will get registered in your memory. So we will understand as to what is HABU. Then we would look at the IndAS 36, which is on impairment of assets, IndAS 103, which is on business combinations, IndAS 113, which is on fair value measurement, and then finally IndAS 109, which is on financial instruments. So this is the plan, friends, that we have for today. Let us begin with the first one. So what is valuation? Remember, what is valuation? Valuation is simply finding true value, fair value of an asset or a liability. That is valuation. So what is valuation? To find out worth of an asset or a liability is fair valuation. And remember, that is the crux of the entire valuation, and that is what you need to remember. Number two, what is the purpose of valuation? Now friends, these 3-4 questions that I am discussing with you are very important. And why they are very important? Because अगर ये 3-4 सवाल जो मैं आपसे अभी डिस्कस कर रहा हूँ, अगर ये आपने इन सवालों को अच्छी तरह से समझ लिया, तो believe me, your process of preparation for the valuation exam and also your practice as a registered valuer will become very smooth and very clear and unambiguous. क्यों? Because ये जो भी doubts आपके दिमाग में आएंगे, when you are practicing or when you are preparing for the valuation exam, all those doubts, the bottom line, the guiding principle are in these questions. So the question number one that we discussed now is, what is valuation? Valuation is to find the worth of an asset or a liability. What is the purpose of a valuation? Now please remember, purpose of valuation is not to do some calculations in an Excel sheet. Purpose of valuation is not to prepare a valuation report. Purpose of valuation is to create something which is going to help your client taking a decision, and that is the purpose of valuation. So doesn't really matter, you may be in any part of the world, you may be doing any kind of valuation. So the purpose of all the valuations across the globe are one simple, and that is to help your client arrive at a decision. That is so decision making is in the center of any valuation anywhere in the world. So whether you are doing valuation for the purpose of raising fresh capital, or you are doing valuation for the purpose of transfer of shares, or you are doing valuation for the purpose of settlement of family dispute, or you are doing valuation for the purpose of amalgamation or acquisition or financial reporting, it may be anything. Ultimately, the end objective, the end purpose of valuation is to arrive at a decision, and that is what you need to remember. So बहुत सिंपल सी बात है, जब आप वैल्यूएशन कर रहे हो किसी भी क्लाइंट के लिए, तो अगर आपको ये चीज़ याद है कि भाई मैं ये वैल्यूएशन क्यों कर रहा हूँ, ये वैल्यूएशन मैं इसलिए कर रहा हूँ ताकि मेरे क्लाइंट को डिसीजन लेने में आसानी हो, पीरियड. So the moment you understand that I have to help my client through this valuation take a decision, then automatically you will start thinking in terms of the things that will help your client take a decision, and automatically your valuation will go on the right track. Now question number 3, what do we try to achieve while we are doing valuation? And this is again, all of you are going to appear for your valuation exam very soon. Now this is another thing that you need to be always be aware of. You always need to be conscious of. What do we try to achieve while we are doing valuation? And very simple. While you are doing valuation, what you are trying to achieve, you are trying to achieve at the fair value of that asset or that liability, period. तो आप क्या कर रहे हैं? जब आप वैल्यूएशन कर रहे हैं, आप ये मालूम करना चाह रहे हैं कि उस एसेट का, उस लायबिलिटी का फेयर वैल्यू क्या है. And that is what again you need to remember. And why you need to remember? Because once I know that my objective in this process of valuation is to find the fair value, what will happen? Automatically I will start thinking all those things that will help me in arriving at the fair value. And that is the point number 4 that you need to remember. So point number 3 that you need to remember, what do we try to achieve while doing valuation? We try to achieve fair value. We try to arrive at the fair value. Now the question is, what is fair value? What is fair value? And again the answer is very simple. Fair value is something which is fair. A value which is fair. That means what? That means arriving at a value which the buyer will be willing to pay, and the seller will be willing to transfer his asset for that value, and neither the buyer is under any kind of pressure nor the seller is under any kind of pressure. Both the buyers and sellers are also fully aware as to what they are buying and what they are selling. And when you arrive at a value that meets all these parameters, and that is fair value. And that is fair value. And friends, that is what you need to remember. Any valuation exercise, doesn't really matter who the client is, doesn't really matter as to what the product is, doesn't really matter which geography you are doing the evaluation. Ultimately, what you're trying to find out is fair value, and what is fair value is what I have just told you, something which is fair to both the buyer and the seller. Neither the buyer is under any kind of pressure nor the seller is under any kind of pressure. The buyer and the seller both are aware as to what they are buying and what they are selling actually, and that is fair value. Fair. So fair value का मतलब ये है value which is fair, यानी कि कुछ धोखाधड़ी नहीं है, कुछ चोरी चकारी नहीं है, कुछ बदमाशी नहीं है, right? And that is fair value. So point number 5 that you must always remember, why fair value is required. अब देखिए फेयर वैल्यू क्यों चाहिए. It's not that there is a formality which needs to be completed and that is why fair value is required. No, not at all. Fair value is required for two distinct purposes. Fair value is required for two distinct purposes. Purpose number 1, fair value should help correct pricing of a transaction. So fair value, the first purpose of finding out the fair value is to ensure that there is a correct pricing of a transaction. And number 2, fair value is also required so that the assets and the liabilities which are appearing in the balance sheet of a company reflect the true and the correct position of those assets and those liabilities. And please understand why the assets and the liabilities have to reflect the correct and the fair position of those assets and the liabilities, because based on the information that you include in the financial statements, the users of your financial statement is going to take a decision. So if the value of the assets and the liabilities which are given in the financial statements of a company are not correct, obviously the person who would be using your financial statements, and when he would be taking a decision, he would be arriving at a wrong decision. And that means what? That means the whole purpose of preparation of the financial statements is completely defeated. So therefore the second reason as to why do we require fair value, and it is because we want to ensure that the assets and our financial statements reflect true and the correct position of our assets and the liabilities, so that the user of these financial statements is able to take a right decision, a well-informed decision. I would not say right decision, I would say a well-informed decision. So friends, these are the five things that you need to remember, and I can tell you, if you remember these five things, these five things will not only help you in preparation. तो अगर ये पांचों चीजें आपके जहन में, आपकी मेमोरी में, आपकी समझ में अच्छी तरह से बैठ गई, तो पहला आपको इसका फायदा ये होगा कि जब आप अपने एग्जाम की तैयारी करेंगे तो आप देखेंगे कि आपकी तैयारी करने में आपको बड़ी आसानी हो रही है. और नंबर 2, कंसेप्चुअल क्लैरिटी आपको बड़ी आसानी से आएगी. तो जब भी आप कोई पॉइंट पढ़ेंगे तो आपको पॉइंट जल्दी से समझ में आएगा. एंड नंबर 2, जब आप एग्जाम को क्वालिफाई कर लेंगे और रजिस्टर्ड वैल्यूअर हो जाएंगे, और जब रियल लाइफ में आप वैल्यूएशन असाइनमेंट्स करेंगे तो आप उस समय देखेंगे कि आपको वैल्यूएशंस को एग्जीक्यूट करने में भी इस अंडरस्टैंडिंग का बहुत बड़ा फायदा होगा. सो विद दिस फर्स्ट पार्ट ऑफ द सिलेबस ऑफ दैट वी हैव, नाउ लेट अस मूव टू द नेक्स्ट वन. And the next topic that we have as part of our today's syllabus is fair value techniques. So what are the fair value techniques? मतलब क्या है? मतलब यह है, एक बात तो बहुत क्लियर है कि हम जब वैल्यूएशन की बात कर रहे हैं तो बाय डिफॉल्ट इट इज अंडरस्टूड. समझ के लीजिए. सो जब भी हम whenever we are talking about the valuation, by default understand we are always talking of fair value. So the moment somebody says you have to do the valuation, obviously by default it is understood that he is asking that you have to do the fair valuation. You have to find out the fair value. So now the question is, in the domain of valuation, in the valuation ecosystem, which are the techniques that are available for you to do the valuation and to find out the fair value? So basically the techniques which are available in the domain of valuation for the purpose of finding out the valuation can be classified into 3 different approaches. Number 1 is the income approach, and number 2 is the market approach, and number 3 is the asset approach. Incidentally, and please remember, asset approach is also referred as cost approach. So sometimes जब आप आपके एग्जाम्स की तैयारी करेंगे तो आपको ध्यान में आएगा somewhere it is saying asset approach and somewhere it is saying cost approach. So you do not have to get confused and start wondering as to whether there are 4 approaches or 3 approaches. There are only 3 approaches. Number 1 is the income approach, number 2 is the market approach, and number 3 is the asset approach. अब देखिए इसको भी समझ के लीजिए, मतलब इसको डोंट लुक एट इट थियोरेटिकली, लुक एट इट प्रैक्टिकली. तो ये 3 अप्रोचेस का मतलब क्या है? ये 3 अप्रोचेस का मतलब ये है कि एज अ रजिस्टर्ड वैल्यूअर और एज अ बिजनेसमैन और एज समबडी कंसर्न विद द वैल्यूएशन, आपके पास में फेयर वैल्यू मालूम करने के अलग अलग सिचुएशंस में फेयर वैल्यू मालूम करने के 3 अप्रोचेज हैं. कौन कौन सी हैं 3 अप्रोच? पहली है इनकम अप्रोच. बहुत सिंपल सी बात है. इनकम अप्रोच का मतलब क्या है? इनकम अप्रोच का मतलब यह है, द मीनिंग ऑफ इनकम अप्रोच इज दैट when you will try to arrive at the fair value using the income approach, meaning what? Meaning income is going to be in the base for you to arrive fair value of such an asset. In other words, when you are using income for the purpose of arriving at the fair value, that means you are using income approach. Market approach, when you are using market information, for the purpose of arriving fair value of your asset or your liability, it means it is your market approach. And number 3, cost approach or the asset approach, it means what? It means when you are going to use asset or liabilities, the value of the assets and the liabilities for the purpose of arriving at a fair value, that means you are using the asset approach. So now समझ के लीजिए, there are 3 approaches: income approach, market approach and the asset approach. और ऐसा नहीं है, please remember, ऐसा नहीं है that these approaches can be used interchangeably. गलती से भी ये मान के मत चलना कि ये 3 approaches हैं और ये 3 approaches interchangeably use हो सकती हैं. Not at all. Not at all. There are situations where you will have to use only income approach. There are situations where you will have to use only market approach. There are situations where you will have to use only asset approach. You can use other assets only as a backup, but prime approach has to be either of these 3. But remember, depending on the situation. So just to quickly give you example, when I say depending on the situation, what does it mean? It means, let's say for example, you are doing valuation of a company as a going concern. You are doing valuation of a company as a going concern. Now, which approach will you use? If you have to value a company as a going concern, income approach is the one that you will have to use. Can you use asset approach for a company which is a going concern? You can find out value using asset approach also, but will that be the fair value? That will not be the fair value, because for a going concern, if you use asset approach to find the fair value, what is going to happen? The value is going to be far too less than the real value of that company. Real value of that company is much more. And why the real value of that company is much more? Because for a going concern, value of the company, the fair value of the company is not to be linked with the value of the assets. For a going concern, fair value of a going concern, the fair value has to be linked with the future income generating potential, future revenue generating potential, and that will be the basis for the purpose of arriving at the fair value using the income approach. So that is what it is. Now, under these, when we talk about the tactics for the fair value, under these 3 approaches, there are different methods. So let's start with the first one. Under the income approach, there are 2 methods, and this is, friends, what you must understand very clearly. Under the income approach, there are 2 methods. Number 1 is known as income capitalization method, and number 2 is discounted cash flow method. Let us quickly understand them one by one. What is income capitalization method? Income capitalization method simply means you look at the income of this business that you are trying to value for last 7, 8, 9, 10 years as you may deem fit. You may deem, if you think that you need to take only last 3 years or 4 years or 5 years. It is up to your discretion and judgment because you are the valuer, and as the man on the ground, you have the privilege of deciding based on your understanding, expertise and experience, and that's where you have to be really discretionary. मतलब उस समय भाई आपको बहुत सोच समझ के डिसाइड करना पड़ेगा कि 3 साल लिया जाए, 4 साल लिया जाए कि 5 साल लिया जाए. सो व्हाट यू डू इन केस ऑफ इनकम कैपिटलाइजेशन मेथड, 3, 4, 5, 6 साल जो भी आपको ठीक लगता है उतने सालों की इनकम ले लो, इनकम का फिगर ले लो, प्रॉफिट का फिगर ले लो, है ना. नाउ व्हाट यू डू, नाउ नॉर्मलाइज दिस income that you have taken from last 4-5 years of profitability. What is the meaning of normalization of the income? Meaning of normalization of the income is in last these 5 years, let's say you are taking 5 years figures, in these last 5 years, find out which are the exceptional income and exceptional expenses, or extraordinary income or extraordinary expenses. Meaning what? Meaning these income are not the recurring ones. These income are once in a lifetime. So what you need to do, remove those income from your profit, and if there are such expenses, then remove those expenses also from from the figure of the profit of that year. This is known as normalization. That means try to find out how much would have been the profit assuming the situation was normal. तो आपने क्या किया, 5 साल के प्रॉफिट को नॉर्मलाइज करके 5 साल का प्रॉफिट निकाला. अब उसका आप नॉर्मल एवरेज ले सकते हैं, आप उसका वेटेड एवरेज ले सकते हैं. अगेन इट इज फॉर यू टू डिसाइड, बट रिमेंबर if you have to decide, you cannot decide it arbitrarily. You will have to look at the last 5 years, how the company has progressed. Is it that the company has been progressing in a progressive manner, or is a flat progress? So depending on your judgment, you can even decide to find out the weighted average. So that means you can assign different weights to different 5 years, and based on that you can find out the weighted average profit, or you can take normal average also. So now what you have done, you got the average income in front of you. Now what you do, you capitalize it. Capitalize it with what? Capitalize it with your cost of capital, right? Say for example, if the average profit is coming 1000 crore and your cost of capital is, let's say, 10%. So 1000 divided by 0.10 is equal to 10,000. That means value of this business based on the income capitalization is coming to 10,000 crore. That means what? That means I can purchase this business for 10,000 crore. Why I can purchase this business on 10,000 crore? Because if I invest 10,000 crore into this business and my expected rate of return is 10%, and this business is giving me a return of average income of 1000 crore, that means this business is meeting my expected return requirement, and therefore the value of this business becomes 10,000 crore. That is your income capitalization method. Then what you have, then you have the discounted cash flow method. Discounted cash flow method, I am sure you would know it in any case. In that case, what you do, you take the future, you project the future income and discount those future incomes with your cost of capital, and total of all the present values put together becomes the value of that business, and that is also known as intrinsic value. So that is your income approach. Under the market approach, there are broadly two methods. So one is comparable company method and second is comparable transaction method. So as the name suggests, comparable company method का मतलब क्या है? That means you will try and जिस company का valuation कर रहे हो, you will try and find out value of a similar company. Value of a similar company. So value of a similar company becomes your reference value for the purpose of this valuation. Just give me a minute. Right, so that's your comparable company method, and then you got a comparable transaction method. So comparable transaction method meaning find out the transaction that you are trying to value, find out if there is a similar kind of transaction which has been done. So find the value of that transaction, that becomes your reference for the purpose of valuation of the asset that you are trying to value. So that's your comparable company method and comparable transaction method, which are under the market approach. I am sure you can understand why these two methods, comparable company method and comparable transaction method, why these two methods are referred under the market approach. Because how are you doing the valuation? You're trying to find the valuation, or you're trying to do the valuation based on the market information, and that is why market approach. Finally, what you have, cost approach or the asset approach. Under the cost approach and the asset approach, the number one that you have is book value method. Very simple. What is it? बुक वैल्यू मेथड मीनिंग व्हाट, जो आपकी बैलेंस शीट है और उस बैलेंस शीट में जो एसेट्स हैं, उन एसेट्स की बुक के अंदर जो वैल्यू दी हुई है, उस बैलेंस शीट में लायबिलिटीज की जो वैल्यू दी हुई है, pick those assets and value of the assets and the liabilities as it is. So total all the assets appearing in the balance sheet on one hand, total all the liabilities other than the equity on the other hand, and what you do, you deduct the total of the all liabilities other than the equity from the total of all the assets. What you get in your hand is your book value. That is your book value. So remember, it is a fair value. It is a fair value based on the book value. So please pay attention. That means what? That means a company may have multiple fair values based on the approach and the method used. So you will be able to calculate multiple fair values, and out of all those fair values, as a registered valuer, you will need to pick up which is the real fair value. And of course, the real fair value going to highest, the figure is going to be the real fair value. So that's your book value method. Then you got a adjusted book value method. Now what is adjusted book value method? Very simple. The land which is appearing in the balance sheet of your company is reflecting at 1 crore. This land was bought by you 20 years back. Today the market value, today if you sell this asset, this land in the market, you will get 20 crores. So what you do, when you are using the adjusted book value method, what figures do you take for the land? You don't take the figure of 1 crore, which is the book figure. You take the figure of 20 crore, which is the real figure. And this is how you adjust all the figures for all the assets and the liabilities which are appearing in your balance sheet. Based on that, figure that you work out is referred as adjusted book value. And the third is replacement method. Replacement as is what is. So replacement का मतलब क्या है? replacement method का मतलब ये है कि ये जो asset है, जिस कंडीशन में है, उस कंडीशन में अगर उसको रिप्लेस करने के लिए जाएं तो कितना कॉस्ट पड़ेगी. दैट इज योर रिप्लेसमेंट मेथड. प्लीज रिमेंबर, रिप्लेसमेंट मेथड इन द कॉन्टेक्स्ट ऑफ इंश्योरेंस कवर कैन बी लुक्ड एट डिफरेंटली. सो इन द कॉन्टेक्स्ट ऑफ इंश्योरेंस कवर, a replacement cost will be in case if the company's assets are completely destroyed, and insurance company will take or will give the cover or will reimburse the amount that the company would incur on replacement of all the assets fresh. So that is the difference that you need to understand. So replacement method, as we understand, it normally is on as it is basis, but in the context of insurance, please remember that means replace with new assets. Because अगर एक कंपनी की फैक्ट्री में आग लग जाती है और वो फैक्ट्री को अगर दोबारा खड़ा करना है, तो फैक्ट्री को दोबारा खड़ा करने में जो खर्चा होगा, इंश्योरेंस कंपनी will reimburse that amount. Of course, they will charge so much of extra premium also for such a policy, but that is what we need to understand. And the fourth method under the asset approach is liquidation value method. So what is the meaning of liquidation value method? The meaning of liquidation value method is this company is going for liquidation, यानी कि ये कंपनी बंद होने वाली है, और चूंकि ये कंपनी बंद होने वाली है, इसका मतलब ये कंपनी की सारी एसेट्स को सेल करना पड़ेगा. ये कंपनीज की सारी एसेट्स को सेल करके और लाइबिलिटीज़ जो है कंपनी की, उनको पे करने के बाद जो पैसा बचेगा, उसमें उससे पहले जो खर्चा होगा, the expenses that you will incur on on the disposal of those assets, what will remain ultimately in your hand? That is your liquidation value. So say for example, whatever the assets value which are reflecting in the books, अगर if let's say that is 100 करोड़, लेकिन ये सारी एसेट्स को आप मार्केट में सेल करने के लिए जाओगे तो आपको मिलेगा 50 करोड़. सो 50 करोड़ आपको मिलेगा, और 50 करोड़ तो मिलेगा, लेकिन आपको 1 करोड़ का खर्चा